The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Glenn in Massachusetts. Hey, Glenn, what's going on?
You know what is good for us is Tom O'Brien providing an unbiased source of information for us investors. You don't have an agenda. It's just to cut through everything and to give us the facts. I want to thank you.
Well, I appreciate it, man.
And now, here's Tom O'Brien.
Well, welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully in the moment. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow up 8, NASDAQ up 21, S&P's up 5, gold contract down 640, trading out at 1521.40. Silver off 33 cents at $37.31. Platinum down $9 at $1,770 an ounce. Copper up 2 pennies at $4.12 a pound. Light sweet crude down $1, trading out at $100.31 a barrel. Bonds up 29 ticks at 125.31. Dollar index down 36 ticks at 75.66. Euro is up 4 ticks at 141, and the yen is down 63, trading out at 81.35. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're up $5. You really had a sideways day. You're going into the 23rd. We did $866 million there. We did $846 today. No big deal. You're also coming into the 5th. And what we had there is that you do $1.1 billion. What I do expect, you're going into the holiday weekend. You'll get a little pop up here tomorrow. We'll get into somewhere about 1333 with dramatically lighter volume as we did today. This is setting up the B to C of a larger ABC structure on the way down. That's your S&Ps. We go to the Dow Industrials. We take a look at the Dow Industrials. Same type of setup in the Dow Industrials. A real sideways day out here. $8. You're at 12,402. Now, that 12,402 is over the February 22nd and February 18th time frame. So that's still in the larger range, the higher range, rather. I suspect you'll get a little bounce here, but this also is basically doing an ABC structure on the way down. Now, it's going to have to get back inside that lower range, which is the 389. We go to the NASDAQ Composite. We take a look at the Composite. The Composite out here today, sideways move. Well, you're up 21 points in the Composite. The Composite's filling that gap. There's a gap on the NASDAQ. The top of that gap is at 2803. And what we did out here today is that we went up 21 points. We got into those levels. We're trading 1.8 billion shares versus how we're coming downtown with 2 billion shares. So you get a bounce up here. The range in the NASDAQ, the range in the S&Ps, and let's go take a look at the Russell 2000 and see if we stayed in the lower range in the Russell 2000. The Russell 2000 that's still in the lower range. The number for the Russell 2000 is 838, and right now we're at 830. So I suspect, tomorrow is going to be a slow day. We get the Memorial Day weekend happening. Tuesday, coming back, it's flat out going to be summer trade now, too, folks. And what happens there is this, is that Friday afternoons get slow, Mondays get slow. The long weekend, Tuesdays will get slow next week. So the day that the market has a chance to get traction on the way up and or the way down normally turns into basically a late Monday, Tuesday, Wednesday, full day Thursday. That's what we're going to be dealing with from now until about Labor Day. Our phone number is 877-927-6648. You You're going to love this, okay? So you had Bloomberg. Bloomberg had to turn around and fight the Fed for over 2 years in order to get the documents that they were requesting from the Freedom of Information Act out of the Federal Reserve Bank as to who got the loans, how much money was had in all the banking structures off the Fed. So they won that battle. But listen to this. This is pretty amazing. So inside that, what no one realized, well, I'm sure someone realized it, but it basically did not come out till today, is this. There was a second way in order to get money off the Fed also, which in that filing and in the Dodd-Frank Act, no one put in. And that was the Open Market Committee. Well, it was the Open Market Committee, but when you're asking for documents, you have to ask for specific documents. And the bottom line is that these documents came out this morning. So check this out. This is absolutely amazing, folks, okay? So from March of 2007, going all the way through to 2008, the Federal Reserve, through the Open Market Committee, pushed out $80 billion. Now, when we're talking $80 billion, we're talking about an average of $80 billion a month in loans given to the banks. Goldman, they were getting an average of $30 billion a month. Now, check this out. At that particular point, if you went to of course, the Federal Reserve, what ends up happening with the banks, they can go to the discount window. Now, the discount window itself, if you remember, they were saying, oh, they don't like going to the discount window because that's saying that it's weak. Well, the discount window itself had loans at 0.5%. Now, even at loans at 0.5%, you figure all they have to do is get it at 0.5%, and all they have to do is push that, get more than 0.5% on their money, and you're going to make money, right? I mean, that's how it shakes out. Well, this is so far over the top, it's unbelievable. But this is how broke the banks were. The Federal Reserve was giving the banks loans at 0.1%. So they were rolling loans at 0.1%. That is just making money hand over fist. Now, the loan structure, the way it went is this. The loan structure was a 28-day loan. But what you had is that loan structure was getting rolled over every 28 days. So when you see how the banks are repairing their balance sheets, you can see that when you have the power to print money, just how dramatic it can get. And it looks like that the bigger banks, there was 32 banks, but the bigger banks inside there were Credit Suisse, Royal Bank of Scotland, and Goldman Sachs. They're the ones that really rolled with some bread here. Big time, too. Yeah, and the banks, well, I suspect the banks were actually more than likely just buying the bonds. They could just roll the bonds. You could roll 30-day paper and just make money hand over fist then. That's, it's not that they didn't have to go too far. That was basically just an accounting gimmick. They get the money off the Fed, you roll it into, hey, listen, if you roll it into 0.1% to 0.5%, the cheapest rate at that particular point was from the Federal Reserve discount window, which was 0.5%. So, bottom line is that you can see you can make what's that? 1, 2, 3. So you're making 400% on your money, and making 400% on 80 billion is not a bad deal. That's what it comes down to. So we talk Brazil. Now check this out. This is pretty wild too. Brazil about 3 years ago came across saying that the oil find was not only the largest in the world in the last 10 years they found. Now they came out today and said that, well, it's only half that size. And it's pretty dramatic because what you do have is that if we look at the actual Brazil markets, inside the Brazil markets, of course, the monster out there is Petrobras. And, bottom line is that when you look at the Petrobras in itself, it comes out after the fact That's a state-owned company. But the bottom line is that this is an equity that went from $39 down to $24 when oil is going through the roof. Well, now you can see why. Someone always knows something. The stock didn't get hit today, but of course it's got hit over the past year and a half. So as Brazil was saying that they had all that oil, evidently someone knew that, in fact, all that oil was not going to be there, number one, and the run-up in Petrobras wasn't real. So it's pretty amazing because, see, if you look at any other oil company out there, not any other oil company, but let's just take ExxonMobil, and you bring it back to 2008, and if you want to see the differences, and this is just absolutely amazing. So when we look at ExxonMobil from 2008 coming all the way out, what you have is ExxonMobil goes from a low out there of 55 and it's trading at 82. Petrobras goes from a high of 40 and it's trading at 24. So you can see that at all times misinformation is a big deal. In this particular case, what Brazil's saying is that when they first went out there, and this is the actual state too, by the way, when they first went out there, it wasn't as accurate as they felt. Well, bottom line, wasn't as accurate as they felt, but it was even heavier than that. Bonds. Let's go take a look at the bond market out here. What we had with bonds. Bonds out here today almost up a full point. You're trading out at 125.31. This 126.11 looks like it's going to be not only had what the difference is, however, and this, we've been watching this Tiger Gottlieb. Now, what you have here, though, is that the volume is expanding dramatically. So what you are looking at is that if that volume stays like that tomorrow, that would not be a trade. And this is what's so cool about the Tiger Gottlieb, folks, because you wait for it to come up to the number first. You wait for the volume to see what the volume is. And what you have here is that we did 605,000 contracts today. If that was going to be a trade, meaning a short trade up there, that should have come in a lot lighter. We'll see what has to happen in 11 ticks, but I can't picture it dying on the vine in 11 ticks. So what that's saying is that I suspect what very well may happen is that this may turn into a butterfly, which would be just a total mind blower, because if it did, that would be basically putting the interest rates dramatically lower. Because what would end up happening is that would have to get through the 128. It would get into about the 131 area. Some of the high volume stocks we had out here today, you had Microsoft up 48 cents. You had AIG up 47. General Electric was up 20. We had Intel back 18. The Oracle was up 41. We had Freescale Semi. Freescale Semi come public today. That was up 33 cents. They were lucky they got that off. You talk about a price spread out here today. It traded from 1950 to 1826. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, we had the Dow up 8, NASDAQ up 21, S&P's up 5. We're going to be right back.